All right. Good morning, everyone. Dan here from tradingology.com in the trading room for April 22nd, 2021. We got a Thursday shaking, so we got a few news things to check out. As usual, we do have Dave joining us from our strong market team that we partner with. So good to see you, Dave. Happy Thursday.
Good morning, Dan. Happy Thursday.
Another eventful time.
Did you send us some snow? We have a snowstorm going on right
now. We've seen flurries the last couple of days. It's below freezing again at night. The weather can't. I think everybody got spoiled. What it was 2 weeks ago when we hit like the 70s and 80.
It's pretty crappy.
Mother Nature said, we're not done yet.
I know, it's April 22nd. Usually we're done with snow by the end of March. So this is unusual. And there are some things in the markets that are unusual, which we are going to talk about today.
Yes, we have some very interesting charts to check out, and a little mini rally happening as we speak right now. I see happening.
We started down. I think the Dow is still down a little bit here, but down 117 points. But I think we got one more rally coming before we can try to short again. We try to short every time. Looks like we're going to get a little bit of a pullback, and it hasn't worked out yet. Although we made some money, we made a little bit of money last weekend.
Yeah, we had a little short that we carried over the weekend on the entire market. So it was all of them. For myself, I had MYM, MES, M2K, MNQ. I had one contract short on all. I actually had two on MES just because I like MES. But yeah, they held nicely and then took some profits before it rallied back up. But then it dropped like a bunch again. We're like, why didn't we hold that?
Because the market always goes up.
But this is why we didn't hold it, was because of yesterday. We just got a little bit too soon. You can't time bottoms and tops perfect. We're not saying we're timing it perfect, but there is definitely good opportunities still out here.
Yeah, there sure is.
Good morning, Andre. Good to see you.
I think you're right on with the 2100 on the S&P 500. I think we're probably going right back, or 42. I'm sorry, 4211.
4211 is the call on the MES contracts.
Yeah, 4211. Actually, Elliott Waves marks it right around that level.
Is that lining up? That's even better.
And the target on the Dow is 34,718.
There you go. And we are at 34.2 currently. So yeah, not too far away. One more push higher we'll see. We got left in the market here for sure. And then it might be another good opportunity to hold some shorts.
Yep.
And take a quick look at the internals. Yesterday was the first day in a while that we've seen almost a plus or minus 2,000 day as it rallied up from the open. It was started negative, but then it just took off. And then just a stair step up all day, which is about the reverse of the day before, whereas a stair step down. So we're starting to see the more volatility that we see come into play, where we have all down one day, then all up the next day. Today, we're just hovering around the zero line so far. So we're probably going to see definitely back and forth here, unless this starts to actually stair step up. But it's right above, just barely above zero right now in the internals, 93. But a big drop in the VXX. Those that are monitoring the VXX course in the trade, we have some good profitable trades on there right now. They are about 20% of their profit goals. So monitoring that, those are looking good. And as it is Thursday, we might as well take a look at see what our unemployment claims did. Yeah, forecast is 607, and it was actually below 547.
Good news.
Big green number. Look at that.
500,000. Yeah, that's good. That's good. Yeah.
I've been hearing a lot of things recently on the news, on, just on the radio with, it's like a record time for help wanted signs popping up. So there's openings everywhere, but no one wants to take them.
Well, if you're getting $300 a week on unemployment, nobody wants to take those jobs.
Right. Unless it's a job maybe building houses. They can't build houses fast enough.
Oh, yeah. And the price of houses is going up. I think I related to you a couple of weeks ago when I got the first jab of the vaccine. The pharmacist that we were talking to said it lives right around the corner from me. He said his house doubled in price in the last 6 months. I said, really? Because I don't keep up with the local real estate. I'll have to look at mine. Yeah, it's gone up a lot.
And I even saw, in this part of the world, there's record permits for houses being built. It's more than last year. It's just going berserk.
Yeah, I wonder why though. We may have a clue.
Yeah, so we started looking at things historically. We know other people have started talking about that, but I started looking at, if we were looking at houses, right? And Dave checked this out and said, hey, we need to look at this morning, is lumber prices. You guys have known, we talked, I think we mentioned it a few weeks ago because it did go crazy. But if we look at historically, we see these ebbs and flows where it was around 200, 300, 400, 500. It spiked up to in May of 2018. But pretty, basically stable where it's riding along here. But then we see it suddenly took a little change. So 2020 came around. Here's March, April. So this is when everything started happening last year. Stock market took a big dive. Lumber futures started going ballistic. So it crushed right through this previous high of 650, went all the way up to 900. We'll just roll it forward. Then it took a big old gap down in September. So this was last fall. So something happened there where it just missed out on 1,000. And I should probably throw some fibs on here because that'd be interesting.
Yeah.
And then we started hovering as like, all right, are we going to go back to normal? 500-ish? Oh, no, we like that almost 900 again. Then we took another big gap down. But then look where it's going now. It's off my screen now.
Yeah.
Holy cow.
Yeah. It's just, actually that doesn't look terrible. On the daily chart, yeah, it looks like it looks like a cryptocurrency chart almost, right? It looks like, hey, we hit a bottom and now we're starting to rocket. But let's take a look at the monthly.
So let's look at the monthly. Oh, yeah. Wow. Okay.
You got to go back farther than that. I don't know if you can, but yeah, from 1973 it starts. And you can, since 1973, it's been barely above 500, right?
Yeah. That was like the top. That was the ceiling. It touched it 1, 2, 3, almost 4.
Yeah.
Not even quite 5. But then 2018 was the first break over 500. So in 45 years, almost.
No, it's more than 45 years, isn't it?
Yeah, I'm doing the quick math here in my head. I shouldn't have that math.
Yeah, 1973, and we're in 2021. That's 48 years. You're close.
Yeah, this looks like a chart of my life because that's when I came to his existence.
Yeah, it's crazy.
Andre,
what's going on with this? Why? Is it anybody got some insights? I know. Don't we have somebody who's in the lumber industry, or
I don't know if he's on. I know we got a guy in the oil industry.
Oil, yeah.
Andre says he's talked to a guy who makes candles from canola oil, and he said it's impossible to get, and prices are going up tens of percentage points monthly.
Wow.
Canola oil?
Wow. I'm going to go stock up.
Interesting. Do they have a chart on canola oil?
Yeah, maybe I can sell them on eBay.
It's not a bad idea.
Yeah, that's pretty crazy. It's just unbelievable when you look at that monthly chart, how much we've gone up. Now, in the early days of my investing career back in the mid 80s, lumber was always a sign of a healthy economy when it was rising because it showed demand and it showed that there was building going on, that there was activity, that it was, it's a pretty good sign. I would suspect, though, that this kind of a rise in lumber is not a good sign because it's too fast, too quick, just like interest rates rising very, very quickly instead of a nice stair step.
Right.
Whoa.
Look, I got news for you.
Whoa, look at that.
I just popped this on the weekly.
Yeah.
Little swing low back here, swing high. 2 bars on each side makes us valid, and 1373.6, and look what we got a high of 1374.7. So based on that, I'm expecting a pullback.
Ah, nice. Wow. I like those fibs.
It's amazing, isn't it?
Mr. Fib.
What's the daily? Let's look at the daily. or that's the monthly. Let's pop down to the weekly. So there's where the weekly comes out. Yeah. That's really interesting.
That is beautiful.
Doesn't lie.
That is
Look
beautiful.
at those retracements down to 618.
Mm-hmm.
Bam.
That's very, very nice. So, we've got, so my suspicion is that the reason why existing houses are probably increasing in value is because building a new house is almost out of sight. I mean, if lumber prices used to be $400 to $500, now contract size in lumber futures contract is 110,000 board feet, and it's in dollars per thousand board feet. So 1,000 board feet of a 2x4. This is a 2x4 has tripled, just about tripled in price from, when was that? Early 2020.
Yeah, at the beginning of 2020.
Tripled. So existing houses, hey, cheap by comparison, if you're going to go out and build a new house, the price is tripled. How bad is that? So existing houses are going to go up because people see it as a more viable opportunity, maybe to do renovations instead of building brand new.
And will that affect how residential houses are built? One big difference in like commercial buildings is they don't use wood 2x4s for fire codes and whatnot. Will this make a change for residential houses to go to steel 2x4s? What's the price difference? I'd be curious to do some research on that.
Yeah, steel has gone up too quite a bit. So I don't know. I think most residential housing is still 2x4 construction, but I'm sure there's quite a bit of it being built in steel as well. I think steel has taken quite a bit of the market, but it used to be unprofitable. I talked to a guy who was building houses for a living back in the 80s and 90s, and it was unprofitable for him to build a house less than 2,500 square feet. And then it went to 2,800 square feet, and then went to 3,000 square feet. He could not build a house and make a profit on houses less than that.
That makes sense because you don't see the traditional starter houses built anymore. Everything's 3,000 square feet. It's like, we don't need that.
Yeah,
but not everybody needs that. Some people do, but not everybody. But you can't, people looking to buy a new house or get into the markets, they can't find old ones because they're already overpriced and they can't buy new ones.
Yeah, exactly. Back in World War II, after World War II and all the soldiers came back, it was a flurry of housing activity. People were building houses, starter homes for under 1,000 square feet. And I grew up in one, actually, in my neighborhood. It was it's just a really small 2-story. I forgot what they call it. They call it like a cigar box house. It was so small. It was incredible, but it was really well constructed. And there were 5 of us living in there. Everybody had their own bedrooms. It was an inexpensive house. I think my father paid $5,000 for it when he got out of the Army. And today, that same house, you're talking from the early 1960s, there were 50s and 40s. Well, he bought it in the 50s, and now it's $198,000
from 5.
From 5.
Wow.
And it probably cost him couple thousand bucks to build.
Right. Yeah, exactly. And now it costs that much for 1,000 feet of board.
Now, 1,000 square foot house like that would probably cost about $240,000 to build because of the price alone.
Or if you put that in San Francisco, it's $2 million.
Yeah.
Curtis says he's speculating supply and demand playing a part with the pandemic, creating a shortage in lumber with an increase in demand. So that's part of it as well.
Yeah, definitely a shortage. Yeah.
And Andre's got a good point here too about asking, how does this affect our intention to increase our commodities positions? Well, if supply and demand is pushing commodities up, let's take a look at the USCI, the U.S. Commodity Index. Remember, we got our shorter term channel. We're still flowing in. It's coming to the top of it right now, but we see last time it kind of rode it up. Commodities are still on the rise.
They are. Amazingly so. But what happened to interest rates? See, they're going to follow interest rates, and interest rates have and they shot up initially, I think, in a reaction to the opening of the economy, showing good times are coming, but they're back down again a little bit. The one thing that does kind of concern me, though, is the yield curve, because the 30 years at 2.2, the 10 years at 1.5, and it hit 1.7. And so that spread between the 10 and the 30 has really narrowed. The 10 year is running a little bit hotter than the 30 year at this point. I don't know. It seems like there's two camps here. There's people who say, yeah, we're in a commodity super cycle. It's just going to keep going up. There's other people who said, you know what, it's probably going to have one more downturn. And this is simply a kind of a condition that's a temporary condition based on the reopening trade. And we're going back down. Commodities will go back down and interest rates will go back down.
They don't have too far to go down, though. That's the problem.
I know.
That floor is like, we're kind of laying on the floor already.
Yep.
And that's always been their go-to tool. And they never were able to, the minute they started to tighten, that's when the wheels started coming off the bus again. So they can't ever raise interest rates again, so they can use them as their tool to drop them.
That's right. The last time they tried to tighten was back in early 2000 or late 2018, like in September and October, and the market just tanked.
Yeah. So it's like that cat's out of the bag.
Yep. What is that? If you go back to September 2018 on that, let's look at the 10-year. What's that? The 3-year?
Yeah, that's the 3. I'll go back to the 10.
Let's see what happened during that time when they started raising rates in September and October, and the market tanked.
Right there.
So it sharply rose higher. And I think there's an expectation that the economy is going to do a lot better and the Federal Reserve is going to raise rates. So there's some expectation of that. And that's why rates have risen. But then Powell did an about face and said, no, we're not raising anymore.
Yeah, that was trouble. They can't have the market losing money because their friends lose money. So they reversed that immediately.
Yeah, and then rates dropped.
Panic struck in. Everybody couldn't find toilet paper, which it's funny because there's like extra supplies of that. Now I've seen that on the news as well, where people are talking about there's too much toilet paper. It's like ridiculous. I still don't understand that.
Yeah, I didn't quite get that either. I mean, I don't know.
Now we're hitting that long-term trend is where we're at. And will they be able to go up on the 10-year or not? It broke through a little bit. You know, the first time's a test. Will the second time have the energy behind it? We see that very often in other instruments. It's interesting how, you know, there's two ways of looking at things, right? There's just the technical analysis where you look at a chart and you don't even look at what it's a chart of. It's like literally, we're just going to make a decision based on where this is as a number and a pattern versus, hey, this is actually something under the covers. That's what always drove me wild about company stocks, because people would trade it based on what this chart said, which has nothing to do with the fundamentals, which always drove me nuts. So I think a lot of that is interesting too, where, yeah, you want to take this into account, but it's not the holy grail. It's like, hey, just because this line says that doesn't mean it's going to do it. You have to look at what's actually causing it in reality. It's like in reality versus, you know, cyber zone or whatever you want to call this, you know, online social media versus reality of, you know, why is lumber going up? Well, because the chart says it is. Well, no, lumber's going up because of these facts in the world.
Well, you know, we are remiss in not mentioning that on Tuesday, that it was 420. And as you know, as you probably may have heard, 420 is marijuana day.
Yeah, and I was seeing that was probably the last illegal 420 they're talking about.
Oh, really? Oh, okay. Yeah, maybe. It could be. It could happen. But it was also Dogecoin day. I
haven't even looked at it. I've seen all the craziness.
Yeah, it was Dogecoin day. There's a group of everybody on this one Reddit thread and in Discord. They wanted to pump Dogecoin to the moon. Guess what happened instead? It dropped about 20% that day.
Let's take a look. Pull up my crypto chart here. It looks like lumber.
Yeah, exactly. We found a correlation.
Right? Lumber and Dogecoin.
Yeah.
Dogecoin. What do you call it?
Doggy coin. I like to call it doggy.
Well, I saw a tweet. Whatever Elon says, just buy it. Because whatever he does, he like gets his army behind him. And then, because I think he was tweeting about it a few weeks ago, and then it went ballistic, right? So look at this. 6 cents to 44. But then, yeah, Tuesday, they wanted to make it fly. Let me put a measurement on here. Yeah, it only dropped 25 some percent. Turn my magnet off. 36% down to the lowest part of the day. Good times.
Yeah. So, I mean, it didn't really work. They tried to pump it up and it didn't work. I think whatever is going on with that is probably, the end of the story, but it just shows you that a joke coin, a coin with absolutely no utility or purpose,
right?
It can go how many tens of thousands of percent. Since last year, it was under a penny. I mean, it's just absolutely insane.
Here's the other craziness. If you want to, take it historically, less than 1 cent, just like you said, 0.0. There's 0.1. They got the 1 penny right here in January, and then January 28th. Apparently, they must have sent out a signal. Everybody buy it. We're pumping it up. This is probably on Reddit. Is probably where it was.
Well, I had Dogecoin since it was below a penny. It was like 0.007. It cost me $300 because I had some money in Robinhood and from Bitcoin purchase back then, and I said, well, and they or no, it was only $90. It was $90. Because it was 3 times, I think it was 3 times or whatever I was buying, and I could not take the money out of Robinhood because you need a minimum of $100 to make a withdrawal. So I said, well, I don't know, what am I going to do with $90? So I put it into Dogecoin. I bought 30,000 Dogecoin with it, and I sold it at 6 cents. I should have held on for the 40 cents. Right. Yeah,
I did the quick measurement on there. From less than a penny up till that peak, 5,200%. So 5,000% return.
Yeah, I mean, $90 would have generated close to $13,000, $14,000 for me.
Yeah, at that point, you don't want to do the math.
No.
Don't tell me how much it would have been.
No. Yeah, all the cryptocurrency guys are going to hate me for this, but yeah. Anyway, I'm not a fan of Dogecoin.
Yeah, they're still tracking down right now. Looking at Bitcoin. Bitcoin's 54.8 currently, kind of hovering. Yesterday was a down day for it. We'll see where today ends.
Well, we've got Ethereum up 10%. We've got Link up 11%. HBAR is up 2%, but it has been going down over the last week. So I'm not quite sure, what's going on with the market. There are pockets that are doing really well. Algo is up 9%. I'm still pretty bullish on most of the crypto, although I don't own any at this point. Sold out my VET, which I did way too early, but I do like VET. I think that's going to continue to go higher. The only caveat to that is what we've talked about in the past is DXY. DXY has pulled back a little bit over the last couple of weeks. And that's why cryptos, I think, have resumed their uptrend. But today and yesterday, we're up again on the DXY. So I don't know if this is the resumption of the uptrend or not, but we'll see.
Yeah, is that another lower low? Or no, it's kind of sideways.
Yeah, now it's a sideways pattern, definitely.
Yeah, because we got a lower low from here, but a higher low from here, higher high. So yeah, we'll see if it returns back up and it hits this target. That's still in play.
Yep, the target's still there. Yep.
Didn't quite make it all the way to the 618 retracement, but it's definitely hit the 50.
Well, what would be really interesting is if we start to see a resumption of the dollar index or just a continuation of the sideways pattern. And then we get a top in the S&P 500 and the Dow at those levels we mentioned.
Right.
You know, if we start to see any pullback at all, I mean, actually that the Tuesday resumption there in the DXY corresponded with that 250, 300 point decline in the Dow. So there's a correlation there. There's also a correlation between stocks and crypto. I've noticed more and more that, you know, when stocks have been going down Monday and Tuesday this week, crypto was also down. Now we've kind of resumed the uptrend, and, you know, crypto is starting to go back up again. So there's more and more of a correlation there.
So keep your eyes on that over the weekend. We're about wrapping it up here. Last thing Andre mentioned there was, yeah, Dixie up, crypto down. That's typically the inverse correlation. Andre, you got it.
I think it was stronger last year than it is this year. I think crypto is becoming more and more of a risk asset similar to stocks. And so I think the correlation has shifted a little bit towards stocks rather than DXY. DXY seems to be doing its own thing here.
All right. I think that'll do it for now. I don't see anything left on my screens that I needed to bring over. So I will wish you guys a fantastic weekend. And as always, hit up in the email. If you get some good feed and you're watching us later on the recording on YouTube, give us a like and a subscribe so you'll catch us when we do normal videos coming out. And you have yourself a great weekend, Dave, and everyone else. Stay safe.
You too, Dan. Take care, Curtis. Have a great one. Andre, Kyle, have a great weekend. We'll see you on Tuesday.
Appreciate it, everyone. Bye-bye.